China's latest lockdowns have led to the closure of factories that make products for some of the world's biggest companies. Tesla was forced to suspend production at its so-called giga-factory in Shanghai this week. That facility has a daily output of more than 2,000 electric vehicles. Those cars are meant for the domestic market and for export to places like Japan and Germany. iPhone maker Apple also faces a shortage of gadgets after its supplier Foxconn was forced to hit pause at its factory in Shenzhen.
The fact that now China is moving into further lockdowns, this is a serious problem for much of the U.S. manufacturing. So you look at a company like Apple, who has been able to weather the storm of supply chain issues. But if you see Foxconn shut down again, this is going to tighten up the supply for many of our electronic products and generally just the things that we consume here in the U.S. and globally.
Those supply chain bottlenecks are expected to add to inflationary pressures that have made consumer goods more expensive. But a slowdown in the world's second largest economy is also relieving some pressure on household and corporate budgets. The cost of oil is down 14% from its peak this year as investors price in weaker demand from the Asian giant. And all of that is not to say that Beijing has been completely oblivious to the economic pain caused by its COVID-0 approach. This week, the government promised to roll out fresh stimulus measures to give domestic output a boost. The market reaction was euphoric. Stocks in the Chinese mainland and the financial hub of Hong Kong soared on the news. Among the biggest gainers were Chinese tech giants, which surged on the prospect of more business-friendly policies by Beijing. That helped boost the wealth of China's richest people by tens of billions of dollars on the day of Beijing's announcement.